Hi, Frank. How are you doing today?
Carol, how's it going?
Wonderful. It's so good to see you. And I wanted to introduce you to everyone. This is Frank Gemma with Caliber Home Loans. And Frank is my preferred go-to lender when I have a buyer looking for a pre-approval, looking to finance their transaction with me. I send them to Frank. And the reason I do that is because I have a 23-year background in the mortgage business, so I know what makes up a good loan officer. And the very first customer I sent to Frank, I was just blown away by how attentive he is to the customer. And he makes sure they know every step of the way. He does that through videos, phone calls, scheduled appointments, and then the day before closing, imagine this, the day before closing, he goes over the settlement statement with them, line by line. So when they get to the closing table with me, they're not saying, hey, what is this? What's this charge? And I can't say enough about Frank. So Frank and I are going to just have a conversation today, and we hope that it will be of value to you all.
That sounds good. Well, thank you for the kind words, Carol. I appreciate that. Yeah, the closing statement's funny because years ago, I always felt like I'm the one who gave the customers the numbers at the beginning that they agreed to. So I always felt like I should be the one going over the numbers with them at the end, right? I mean, they agreed to doing this transaction based on what I told them. So I want to make sure that at the end of the day, what I promised at the beginning, we delivered at the end. And they don't
Yes,
have
and that shows.
Yeah. Because it wouldn't be fair for you or the title agent to have to explain something that we did. It should be, that's on us. So.
And do you know how many times I've had to do that, Frank? I really appreciate it. And my big thing with customers is I don't want surprises. Like, I've been doing this for 37 years. You've been doing it for 25, did you say?
Yeah.
Yeah, I've been doing this for 37 years. And the last thing I want with my customers is a surprise. They happen.
Right.
But I try to prevent them, and you do too. And I really appreciate that.
It's funny because I joke around with clients. I say, listen, surprises are for parties, not for mortgages.
I love it.
I mean, everybody likes a good surprise in a good way, not in this transaction. No surprises.
Yeah, I appreciate that. I'm going to use that from now on. So let's get started, because I know we have a limited amount of time, and we want to provide as much value as possible to the people that are watching this video. And we're going to do this in kind of an interview format. I'm going to ask Frank questions and he'll answer. So Frank, everybody wants to know, what's the interest rate today?
Yeah, that's everybody's favorite question. So I usually get the call, hey, what's your rate today? So when you're working with a mortgage lenders don't get one rate. So they get a rate page. And like today, for example, it might go from 4% to 8%. So people would say, well, great, I'll take 4%. All right, well, you can. So when you look at interest rates, what we try to do is give you a rate that doesn't have any points. Points are an extra fee you pay up front to get a certain rate. And that's why you have to be careful when you're out there and you're looking at comparing lenders or seeing stuff online. What you end up doing is you're comparing apples and oranges, because you don't realize there may be additional upfront fees. So that's kind of the long story about rates. But where are rates today? On a standard 30-year fixed, good credit, primary residence, single family home, you're looking at rates at 6.5 to 6 3/4, in that range today. The last 2 weeks rates have gone up a bunch. They were really down in the low 6s, and we were kind of getting excited because we're like, all right, we're going to be back down to the 5s.
Yeah.
And then they bounce back up on us because of some of the things that are going on in the economy. If you watch the inflation reports, inflation still is not coming down, even though the Fed has been pushing up the rates to try to slow the money supply. So, the report came out 2 weeks ago, it was hotter than expected. The job report came out, it was better than expected. So all that leads to higher inflation, right? Because there's more money flowing around, and that's what they're trying to control.
I see.
In the short term, that's where rates are today. Long term, the Mortgage Bankers Association and Fannie Mae and Freddie Mac, their predictions are that rates should be back down in the fives, by the middle of the year. And
Oh,
then in the next 12 to 18 months, we may see stuff back in the fours. So, in the mortgage lending side, fingers crossed, right? Because there's definitely an affordability difference between 7% and 5.5%. I mean, that's a big difference
yes,
for a lot of folks.
sure, sure. Now, so speaking of that,
Mhm.
why, if I think rates are going to go down this summer, why
Yep.
should I buy something now?
Okay, so that's a great question because when you think about it at first glance, you say, well, I'll just wait until later because I'll get a cheaper mortgage. That's correct. The nice part, and this is going to sound counterintuitive, but just hang with me for a second. The nice part about the rates being higher, it's slowing down buyer demand. And when you slow down buyer demand, when you have inventory that's still kind of low, people are willing to negotiate with you a little bit. And we're seeing that more and more in the market. Once rates come back down, a lot of people are going to jump off the fence, right? And if you still have a tight inventory like we have, what's going to happen with the prices, Carol? When demand's high and supply's low? That's right, prices go back up. So yeah, for the short term, it may cost you a little bit more for your monthly payment, but long term, you're going to be paying less for the house because your sales price today is going to be lower than what it's most likely going to be 6 to 12 months later.
So what you're saying is the best time to buy a house is when you need a house?
Exactly. I tell people three things, right? I ask them three things, right? So number one, if you don't buy, what's your alternative? Okay, let's just answer that question. It might look different. Hey, I'm living with my parents. I can stay here forever. Okay, well, hey, nice. That's good for you. I don't know.
That has a price too.
Yeah, that has a price. There you go. Right. So what's your alternative? Right? What's your time frame? Right? And this comes in a lot of times with, I work with veterans, and they're only going to be here for a short term, right? 12 months, 24 months. So, is it really the right thing to do to buy a house? We have to answer that question. And the other thing is, can you afford it now? If you can answer those three questions in a way that's positive for your situation, then it's the right time for you to buy. Because keep in mind, you can always refinance later on down the line to lower your payment. Right. So, if you're in the market to buy a house and you can answer those three questions in a way that's positive, then you might as well get in the market and start looking. Right. Especially now where, the demand may be a little bit lower than what it's going to look like, 6 months or 12 months from now when the rates come back down. So
right, because when the rates come back down, as you said, prices are going to go up. And if you don't believe that, I'm happy, and Frank's happy to send you some numbers to prove that to you. I'm working with a customer right now that's in a multiple offer situation. And guess what? They're offering 40,000 more than the ask price. And this is on a lower end purchase.
Mhm.
So, I like the saying you're marrying the house and date the rate. I like that. You're dating the rate. You don't have to keep the rate forever. Find the house that you love in an area that you love. And if you don't buy it now, it's going to cost more 6 months from now because we're still appreciating. We are not having depreciating prices in this area.
We really aren't. And people always say, well, I see these price declines. Okay, well, that you are seeing price declines, but that's not a fair evaluation of the value of the market because the house was overpriced to get go. I mean, I see and I'll see even my own clients who are selling their houses. They're like, yeah, well, my neighbor sold their house, 3 months ago for 500,000, so I'm going to put mine up for 550. Why? You have a $500,000 house next door. That's what your house is worth. Right. So, when the price declines back down to 500, that's not a price decline. You were never at. That's not a value decline. That was just a price decline in the
Right.
MLS. So,
Right. Because sellers think they can get what people were getting last
Last year.
April, March, February. And I'm sorry, folks, but you aren't.
No.
It's just there's not as much demand because I think I read it was something like 1 out of 4 buyers can't buy anymore right now because of the rates. Is that right?
Yeah, I mean, when rates went from 3.5 to 7, I mean, that's a huge jump in your mortgage payment. So even if, on paper I can get them qualified from a monthly budgetary constraint, they were like, oh my God, I can't do that because, I'll never be able to make the payment. So yeah, we did, a lot of people did have to kind of back off the buying. Mhm.
Yeah. And so one of the other things I'm finding now, and what I didn't like about the crazy market that was strictly seller driven, was people were waiving the appraisal amount and they were bringing the difference in cash to closing. Like, that's great. It's okay if it's $5,000 or 10 grand. But you're buying in the hole, basically, when you're doing that. And then the worst thing that was happening was they were not getting inspections on the property. I sold a house, I don't know, 3-4 years ago, and they did the inspection first, fortunately, and we were able to negotiate the price down because of this, but they had over $25,000 in foundation issues that this person could not see, I could not see. And had they not gotten an inspection done, they would have then been $25,000 in the hole, in the equity on their house, because that would have been cash out of pocket. And what if you don't have the cash?
Well, yeah, and that's always the big thing. A lot of folks could scrape the money together for down payment, closing costs, and whatnot. But you and I have lived long enough to know that it's not if an emergency happens, it's just when an emergency happens.
Mhm.
So when people were waiving inspections, I mean, that always gave me a little pause there because I was like, all right. I'm like, are you sure you want to do that? I know you want the house, but you really should know what you're buying. It's one thing if you step into it with eyes wide open saying, all right, I'm taking this house. I know what's wrong with it because you can plan ahead. But to waive them and not do them was always a little scary to me.
Oh, yeah, it's very scary. In fact, I make them put it in writing that I do not recommend they buy that house without inspection because it just doesn't usually turn out well for them. So, okay, so what else? So don't you have a comparison chart that you can provide people that shows them what it's going to cost them to wait to buy a house? I know you've done that for some of my customers.
Yeah, we have a cost of waiting tool,
Mm.
and it basically lines up, here's where we are today. If you wait 6 months, 1 year, 2 years, and we put in some, a basic appreciation numbers, and we put in like interest rate projections to show them, all right, if you wait this long, this is going to be the price difference and the cost difference between where we are today and where you're going to be 6 month, 12 month, 2 years from now. And that way they can make the decision. And in most cases, what ends up happening, like here in our area, historical appreciation is about 4%, right, over the last 50 years. So that's a solid number. You got a lot of years of data. The last 2 years have been an anomaly. I mean, we've really never seen 20, 30% appreciation in the 25 years I've been doing this. So, it's coming back down to normal rates. So it gives them an idea of, all right, well, if I wait, this is how much more I'm going to spend later on.
Yeah, and it's really great because it's in black and white.
Yeah.
There's some assumptions, but Frank's always very conservative in his assumptions. And it gives you numbers in black and white. It tells you what you'll pay if you're paying rent, what what the difference is in a year, 2 years, 5 years. And it's sobering. It's really a great tool for you to say, should I buy now? I mean, I've been doing this, like I said, 37 years. You've been doing it 25. I don't ever want anyone to buy anything that isn't good for them to buy. Now, can I always predict that? Could things happen? Yes, but rarely.
Right.
And I want raving fans, I want people calling me going, man, I love my house. I'm never selling. I'm like, no, wait.
Yeah. Well, and you know what, really, at the end of the day, for you, for me, it's not like, we have this big bucket of money, like all these major firms that can advertise anywhere, spend any amount of money. All our business is referral business.
Right.
So my business comes from satisfied customers. Your business comes from satisfied customers, because you know what? At the end of the day, we really do need to send their friends, family, and coworkers, so that way we can help them, because that's where all our business comes from. So, having somebody who said, listen, they watched out for me the whole way. They took their time with me. It wasn't right to buy here, but eventually it became right to buy, and they guided me through that process. Because that's really what we want to do. I mean, you think about it. Most people, what do you buy? 2, 3 houses in a lifetime?
Right.
You can theoretically think about real estate or read about it in paper, but when you don't do it every day, you don't become great at it. It's not like in your blood. Like, so I tell folks, listen, lean into us. I mean, we'll give you whatever information, we'll point you to different resources, and you make your own decision for you. But we're here to help. I mean, at the end of the day, yeah, of course, there's a compensation part of it for us, because it's what we do for a living. But that's always balanced out. And that's why I like working with you, because it's balanced out. What is really right for this customer? If it's not right, I mean, I'm not forcing anybody into anything.
No.
This is the largest debt you're ever going to create. So I want to make sure I help you create it correctly. So that it's a benefit for you and your family, not a drag on your entire lifestyle.
Yeah, and we sleep better at night that way too.
And you and I both went through this in 2008, 9, 10. I mean, it was heartbreaking when your customers used to call you and be like, hey, could you help me? And you were like, I can't. There's nothing, you know what I mean? Because somebody gave them a mortgage, or they did some stuff that hey, I don't know if you really should do it that way. But the market was so hot and busy, they felt like they had to.
Yeah. 125% loan to value, and the option arms and all the nightmares. I refused, when I was in lending, I refused to do any of those mortgages. I remember my boss came to me one day and he said, Carol, you are missing out on commissions. And I said, I don't care. And I'm so glad, because I never had to have a customer call me and go, now I had customers upside down, don't get me wrong, but everyone did.
Yes.
Right. But yeah, so while we're on that market trends conversation, we have a whole generation of buyers right now that think the rate should be at 3% or less.
Mm-hmm.
When was, other than this COVID pandemic blip, when was the last time you saw rates at 2.5 to 3%?
Never.
Never.
Never. Historically, when you look at the charts over time, I mean, most of the time they're sitting in the 6s, 7s, 8s. That's historically where the mortgage rates sit. I mean, think about it. Somebody's going in their pocket to lend you money for 30 years, right? I mean, they want a certain return on investment. I mean, for the last couple of years, I mean, it's been, crazy, because I never thought we'd see rates like that low. Never, ever, ever.
Me either.
And I don't know if I don't think they'll ever get there again.
I don't either.
I mean, will they settle in and, probably somewhere in the 5s? Probably.
Yeah, maybe 6s, because 6s is the average, in the 6s, mid 6s is the historical for the last 30 years, right?
Yeah, something like that. It's been running in that range.
Yeah. So, we wish they'd get back to 3%. Well, I don't know if I do or not. I had a lot of buyers crying when it was that market. Like, every single buyer I worked with ended up in tears. And after the first couple, I would warn people, oh, by the way, this isn't a normal market, and you're going to be very disappointed before you find the right house. We'll find you the right house.
Yeah.
But this is an emotional process anyway. Buying and selling a house is emotional. It's stressful. I think they said selling a house is like one of the most stressful things people go through. And so I would say, we'll get you through it, but you're probably going to have some tears before we get you through it.
It's
And
interesting you say that, because I have to say, like, going through the financial crisis and going through the last 2 years, the last 2 years were probably harder than the financial crisis, from the perspective that there was so much just tension in the market between the buyers and sellers.
yeah.
Right. I mean, that was, the financial crisis was a different kind of tension. This was, it's such an accelerated pace. You couldn't keep up. I mean, I felt bad for, my partners like you, who you're writing, a dozen contracts for the same person. And you're carrying through that, because there is an emotional weight.
Oh, yeah.
That goes with it.
Definitely. Definitely. And fortunately, I've been doing this long enough that not too many things ruffle my feathers anymore. I'm a very solutions-oriented person, and I'm very peaceful and calm by nature. So I can keep that just level head about me. And having been a loan officer, that's when I learned how to solve the problem. And sometimes I don't even have to get the customer involved. I can solve. It's not that I'm hiding anything.
Right.
I just don't want to cause them stress. And I know you do the same thing. How can we solve this legitimately, legally, ethically? How can we solve this problem and help this person? Because at the end of the day, I know you are, and I certainly am. I am about helping people get what they want.
Yeah.
It's pretty simple. Because I want to get what I want. You want to get what you want, but we're not going to be able to change the Federal Reserve and get the interest rates.
Yeah.
And you really don't want that, because like Frank said, the price of the house, the competition, if you don't have cash, if you're not a big investor, you do not want the interest rates to be low, because we're going to go back to that really unbalanced market. Mm-hmm. We're finally getting a little bit balanced. I think we have 4 months of inventory, meaning if no other houses ever came on the market in 4 months, the ones we have would sell. And is that right? Is that a correct number, Frank, as far as you know?
I thought it was lower than that. I'd have to look. I got to look at the
okay, somewhere between 3 and 4 months. And isn't 6 months a balanced market? Yeah.
Yeah.
So we were at a week. We were at a week.
Yeah.
Less than a month for sure.
Yeah, which was crazy when you think about it, that we had that little inventory.
Yeah.
Yeah.
Now, I know you've lived in the Tampa Bay area for a long time, and you can lend all over the state of Florida. Is that correct?
Yeah.
Yes. So, and I can help sell properties all over the United States, because I'm part of 2 great referral systems. I know you refer out too. My son, you had referred out somebody to my son in North Carolina. And but tell me what you love about living in the Tampa Bay area, and then we'll wrap it up for the folks.
My God, there's so much, outside of the weather, right? So I'm originally from the Northeast, so and I am, and I always have been, a beach person. So the fact that I'm surrounded by salt water and have so many beautiful places to go is, for me, that's my outlet, right? As far as, other things, I mean, between the sports teams, the restaurants, the art venues, there is not a weekend that goes by that I say, oh, there's nothing going on here. I have nothing to do. Right? There's always something, and it's not just one thing. Whatever you're into, there is a spot for it here, which is just awesome. Which is just awesome.
Yeah, so the Tampa Bay area has really made a concerted effort to bring in different lifestyles and offer the choices for different age groups, different lifestyles, and different wants and needs for people. Right. I know this afternoon I'm picking up my 6-year-old granddaughter, And I said, what do you want to do, Maddie? And she said, oh, I want to go to the playground at the pier and then go to the splash pad and then get a snow cone. I can do that.
Yeah.
Yeah, I mean, it's 10 minutes from my house.
Right.
It'll be a ton of fun. It's beautiful. It's on the water. I get to watch people and I get to have a snow cone. So
Well, there you go.
and I get to be with my granddaughter.
Yeah. Yeah.
So
It's perfect.
I love it here. Love it, love it.
So do I.
Thank you. Oh, go ahead.
I was gonna say, I get, family and friends from back home. They're like, don't you want to move home? And I'm like, listen, two things. I've lived here longer than I've lived there. Number one, so this is home. And I'm like, number two, do you see where I live? No, I don't want to move back up there. No, thank you. I mean, I miss you guys and love you and everything, but I love living here. Yeah.
Yeah, and you'll come visit, right?
Yeah, exactly.
And don't you just love putting the pictures on Facebook this time of year of, I went boating Sunday with my son and grandkids and wife, and I just love putting those pictures on. And I don't ever say, here's for all you people up north freezing, but I have to say, I am really happy I'm not up north freezing. I wouldn't get in the water because it was 74 degrees. And people from up north would think that's a hot tub.
Oh, yeah. Yeah. People are like, are you swimming in your pool? I'm like, my pool's not 80 yet. No, I'm not. Get out of here. So
this is really great. I hope we can do it again. And we'll, if you all have any questions, please put them in the comments below. And we will get these informational pieces out to you as often as we can. And be sure to like and follow these pages, and you'll get notified. If you hit the bell, you'll get notified when we post again. Anything else, Frank?
No, that's it. I appreciate being on here, and looking forward to helping more folks become residents of Tampa Bay.
Me too. So be sure to give us a call. We'll have both of our phone numbers are down below too. You don't have to call. I know some people don't like to call anymore. You can text. You can email. In fact, you can just talk to us right here on this page and we'll respond. So whatever works best for you, we'd love to hear from you. And we'd really like some questions that we can address the next time we do.
That would be cool. Yeah, if people have questions, specifics they want us to address.
Yeah. Yeah. Well, it's always good to see you, Frank. And thanks so much.
All right. Bye-bye.
Bye.